Hey everyone, I'm Larry Paul, the Mortgage Answer Guy with C2 Financial, and there's a lot going on in the marketplace. So if you're a realtor or if you have any interest in the real estate market, hang in there till the end because I think you're going to find some valuable information here in the next 5 minutes. 5 minutes? Who has 5 minutes? Anyway, where are rates today? So the MBA weekly application survey came in above 4% for the first time since 2019. Still a great rate, but to give you some perspective, that puts today's rates over a full percentage point higher than a year ago. So where are rates headed? Well, inflation's running hot, which means higher rates. Last week, the CPI, which is a measure of inflation on the consumer side, it was up from 7% to 7.5%. This week, the PPI, which is a measure of inflation on the wholesale side, came in just under 10%. So inflation is higher than it's been, or as high as it's been in 40 years. So the big question is, how's the Fed going to deal with inflation? So we know they're going to raise rates. That's a given. And we know that they're tapering their bond purchases and they're letting their balance sheet run off. But what we don't know is how much, and we don't know exactly how quickly or at what pace. And uncertainty, it means volatility in the markets. So today, the Fed minutes from 3 weeks ago will be released. And we don't know will the bond market like what they hear or not. Normally they don't, but hopefully there won't be any big surprises today, or we could see higher repricing on our mortgage rates again. So the good news is, even though the Fed will raise rates in the near term, it'll be good for the interest rates in the long term. And it's a question of how much pain and how long is it going to last? Because in the end, it's going to also be good for the economy. So, and by the way, the uncertainty regarding Russia and the Ukraine, that's just icing on the cake, right? It brings its own volatility to the market. And that can put pressure on rates too. So is there a housing bubble? Should I wait? Well, inventory, it's continued to decrease over the last 10 to 12 years. And as the population has continued to increase from not just from births, but as well as immigration, the millennials who are in their 30s now, they're fueling about 34% of the demand. And that's going to continue probably at least another 4 or 5 years. And then 15 to 20%, it's coming from investors. So, and they haven't cooled their jets yet either. So the high demand and the low inventory, it's fueled the housing prices in the range of have gone up in a range of like 28 to 35% in 2021. So that's looking like it's going to slow down a little, but we're still going to continue to have rising prices. So the bigger question is, have the rising prices and the higher rates, has that cooled demand at all? Well, if you're a buyer or a seller, it doesn't feel like it to you. That the average market time from the time the for sale sign goes up till they open escrow, it's at about 17 days in Orange County. And with multiple offers and home selling over asking price, it doesn't feel like demand has cooled down if you're a seller or a buyer. But the bottom line is, if you can get a house under contract now, you're likely going to be getting a better price and a better interest rate and a lower payment than if you wait. So call me if you want to talk about the cost of waiting or anything else on the real estate market. I am the Mortgage Answer Guy. And remember, before you buy, sell, or refi, call the Mortgage Answer Guy.